Hi, my name is Bill Blankenship. Thanks for talking to me on the phone or just visiting my site. And I'd like to take a few moments of your time to better educate you and share with you about actually what is a HUD home. First of all, a HUD home doesn't even know it's a HUD home. I get many people, they call me up and they say, what are these houses that are boarded up and they're beat up? No. A HUD home, which, let's find out what HUD is first. HUD stands for Housing and Urban Development. It was created in 1968 to promote safe, affordable home ownership in America. And then there was a federal agency back in 1934 that was created that was called FHA. And that's Federal Housing Administration. I'm sure most of you have heard these terms before, but every time I talk to someone and they call me up and I'll say, do you know what a HUD home is? And they always say yes. And it's probably less than 1% of the people that I talk to can actually tell me what a HUD home is. So I'm going to take my time here now and explain it to you. A HUD home is somebody that bought their house using FHA financing. Now, when you think of FHA, think of like Geico, Nationwide, State Farm, Prudential. When you hear these terms, what do you think of? You think of insurance companies. Well, FHA is a federal insurance company, and their sole purpose is to insure loans to encourage banks to lend you money, because the down payment with FHA is 3%. Example, you want to buy a house for $100,000, you've got to have at least $3,000 of your own money. You want to buy a house for $200,000, you need $6,000. $150,000, you need $4,550. So if you qualify under FHA guidelines, which is a whole lot easier than what a conventional loan is. A conventional loan is basically you go to the bank and the bank wants you to put 20% down. But that's another lesson, and I just want to just give you a good understanding of what a HUD home is. A HUD home is somebody that bought a house and they simply used FHA as a way or a means to be able to borrow the money to be able to get the house. And then for many reasons, you know how life is, we make plans and we get married and it's all exciting, and then 3 years later we get a divorce, or we go and buy a house and we're very happy and excited, and then we could get a divorce, or we break up, or we lose our job, or something happens to us. But when you stop making your payments on your house, that bank is going to foreclose on you, and they're going to take the house away since you're not making the payments. You might be more familiar if you bought a car and you don't make your car payments, and you wake up one morning and your car is gone and it was repossessed. So what a HUD home is, number one, it's somebody that used FHA financing to purchase their house. They stop making the payments, it gets foreclosed on, and the house now goes back to the federal government. That's how it's become a HUD home, because it comes under the Housing and Urban Development Agency of the federal government. And then they resell the houses many times at way reduced prices and special incentives, and they also have special programs that's involved. See, when the house is foreclosed on, HUD now takes possession of it, and then they hire a management company to manage the properties, and every Friday the new list comes out. And when the house first comes out, it's only offered to owner-occupied occupants. That means you can't be an investor when the property first comes on the market. And then there's a 10-day bidding period, and after the 10 days they open up the bids, and it's the person that is offered the most for the house that gets the home. I personally have been involved with many HUD properties that I've helped people to be able to get into HUD homes, and have got excellent results soon.